Hey guys, can you hear us?
Hi.
Hello.
Yeah. What's the good? Hi.
Hi, Chris.
Hello. Oh no, I'm wearing a tie. I'm so bad about that. Everyone's wearing a jacket. Everyone's wearing a jacket. It's, good.
Nice meeting you.
Sorry?
Is it still holiday in Vietnam?
Is it a holiday in Vietnam?
Yeah, the Chinese New Year holiday.
Oh yes, so that was last week. We had a whole week off, which was very nice, which was good. Yeah, I didn't go anywhere. I was just sort of a bit slow in sorting things out. So trying to put a few trips in before the tourists come back.
Yeah. How's the atmosphere over there for the Chinese New Year? Is it like the lion dance, fireworks?
Oh, yes. Yeah. Well, I didn't see any fireworks, but they had lots of lion dances, so that was a big thing. So that was good. Actually, some Malaysian friends of ours, they took us out for a more traditional Singapore Malaysian type Chinese lunch, which was good.
The toast the Eastern, right?
Yeah, correct, exactly.
Toast the food. Some look at it as like what, salad?
A very expensive salad here, I have to say. But yeah, but it was fun.
How long have you been in Vietnam?
3 years now. Oh, this is my second time. I was here for about it's gone all crooked here. I was here for about 4 months. 4 months prior, but and I used to run Macquarie's regional business, so we had interest in Vietnam. So so I've had a fairly long acquaintance, but the last 3 years have been great fun. Notwithstanding COVID, the market was fantastic last year for us, but obviously a difficult time from the point of view of the pandemic.
Okay, that's good. Thanks for joining us today. Yeah. I shall let them do a self-introduction.
Okay, yeah.
Hi, Chris. I believe we've met earlier. I'm Sri from the Phillip Futures Marcoms. I'm very happy to have you here today. My colleague Sean will be speaking right after you, touching on the VN30 futures contract, as well as the opportunities in Vietnam just a little bit. He'll be speaking right after you, and right after Sean will be the Q&A. First to go will be Chechen with an opening address to kick things off the event. Chechen will go live. We'll go on with his speech at about 7:02 p.m. We'll kick things off proper at about 7.
Okay. All right. So I'm planning 30 minutes plus a bit of Q&A. I won't talk about specific stocks. I'll let people ask questions about those. That's basically my understanding. That's how I'm approaching this.
Yeah. I don't think my opening address will just take a few minutes. I don't think it will go up to 10-15 minutes. So just in case, it's probably like a 5 minute type of introduction.
Right.
All right.
So
sounds good.
Will be giving opening, right? Like an intro on the speaker.
Yes.
Okay.
I'll be giving a short introduction at 7 p.m. And I'll be introducing Chris and yourself. Right after Chris's presentation, I'll introduce Sean to walk us through the opportunities in Vietnam.
Yeah. So Chris, which is your country of origin?
I'm English, or British, I should say. But I am from England. But I spent a long time in Asia, actually, so on and off 25 years, so which has been great. So I've lived in Singapore and Malaysia and Japan, Philippines here.
Wow.
Korea, Taiwan. So quite a number of countries. So I've had a very great career, which I'm very grateful for at my age. You know, I'm still keeping going, which is good.
So you spent 20 over years in ASEAN.
Well, not just ASEAN. So I was in Korea for just over a year, Hong Kong for 7 years, Japan for 2 years, Taiwan for about 6 years. So actually, I probably spent more time in Northern Asia than I have in ASEAN.
Okay, that's good. Yeah. Okay, Sri, let us know when you need to start. Yeah.
Yes, gentlemen, you can turn off your camera and mic for now, and then
Okay.
I'll do a very short introduction in about 1 minute, and then we can have Chechen open to the screen, and then he can kick things off with his opening address. Hi, ladies and gentlemen. Welcome to another live webinar with us from Phillip Futures. We have something really special today. We're going to be talking about the Vietnam market outlook, breaking free of COVID, as you can see from our speakers. Our keynote speaker for the day, Chris Han, on his deck for today. Chris is going to be talking about a number of key topics that's on everyone's minds. But first, why Vietnam? Vietnam, despite many economies being buffeted by the pandemic, Vietnam grew sharply by 35.74% in 2021. And with the easing of safe distancing measures in Vietnam, analysts are optimistic about the index hitting new highs in 2022, with growth being heavily supported by key sectors like banking, construction, and real estate. So what are we going to be discussing today? We're going to learn more about the potential opportunities in the stock market. That's the Vietnam stock market, the key drivers, economic fundamentals, MSCI inclusion, and the long-term outlook for Vietnam. All right, so you're tuned in to the right place to learn more about the opportunities in Vietnam. Well, our keynote speaker, let me tell you a little bit more about him. He's Chris Han. He's the head of research for HSC. That's the Ho Chi Minh City Securities Corporation. He's been in that role since August 2019. Overall, he has 30 years of experience in research, fund management, and private equity. Chris has been a regional head for research for HSBC, Macquarie, CIMB, and has run equity teams in Hong Kong, Korea, Japan, Taiwan, Singapore, Malaysia, and the Philippines. So you're in very good hands today as he shares his insights as well as what you should be looking out for in Vietnam. All right, but first to go is none other than the CEO of Phillip Nova, here to give us his opening address. Chechen, if you're all set to go, I can hand the time over to you. Chechen, please. Hey there, Chechen. I'll hand the reins over to you.
Hi, thanks, Sri. Good evening, everyone. Today is the last day of the Chinese New Year. It's the 15th, and we call it the Chinese Valentine's Day. I'm glad that the participants, the attendees today join us despite being the last day of Chinese New Year. And certainly we hope that this Tiger Year is going to be a good year for all traders, whatever your portfolio, whether you're long, you're short, we certainly hope that things move in your favor. And of course, since it's Chinese New Year, I would like to say 恭喜发财 to everyone. I understand we could have participants from different countries in ASEAN, and this time zone is really the evening in Asia itself. It's our honor to have our partner, HSC, and of course, Chris Han, Head of Research for HSC, to join us for today. Having changed our name, the old name was Phillip Futures, which we are very closely associated with for the last 20 over years. This is the first seminar that I'm doing an introduction under the name of Phillip Nova. So for those old supporters, present supporters, future supporters, I thank you for being with us all these years. And this being the first session we are doing on the Vietnam market, we certainly hope that you'll expand the horizon, the investment horizon for all the friends and the customers, and it could be our partners as well, right? When I first look at the statistics, 35% growth in the index over the last 1 year in Vietnam itself, I think I probably, have the sense of feeling that I have missed out the bull run, right? 35%, I believe there must be stocks that are doing much, much better than 35%, which perhaps our friend Chris Han can help us to introduce what are the new sectors or new stocks to look at. And for us, right, for Phillip Nova, one of the key things that we expanded over the last 1 or 2 years, certainly we are known in the market for futures. Why we do a name change is because we have expanded into other asset class. I mean, the likes of gold, FX have been there all along. And of course, lately we introduced equity trading. So customers can come through us, one single account, and can trade multi-asset class, including US stocks, Singapore stocks, and Hong Kong stocks as well. So that's one reason why we changed ourselves to the name Phillip Nova, to be more representative of the products that we offer, the asset class that we offer, and of course, it's also the name of our platform as well. So without further ado, I would like to hand it over to Chris. And certainly, our tagline has always been there: bring global markets closer to you. And the next market will be Vietnam. Over to you, Chris.
Okay, thank you very much.
Over to you, Chris.
Got it, thank you. Thank you very much. That was a very generous introduction. Vietnam is indeed a very exciting market. We had a great year last year. We're hoping for another good year this year. I'm talking in terms of the VN index rather than VN30. We've got 1800 as a target on the index, which is up about 20%. But I have to say, we're a little bit conservative, and we see upside risk to that index target. Key points we're just going to try and address today is that the impact of COVID, exogenous factors such as interest rates rising in the States, obviously what's happening in the Ukraine, etc., will impact the market in the next quarter or two, and that's going to create volatility. And short-term volatility for us is always a good time to be investing. So results and economic data in the next quarter or two may be a little bit mixed, but weakness is always an opportunity for us. Domestically, we think liquidity conditions will continue to be accommodative, and we will talk about that a little bit going forward. Valuations are cheap. We have a lot of retail participation. So the whole idea of liquidity times confidence is very much with us. So as long as retail confidence holds up, we have the liquidity in the market, which should see us right during the course of FY22. We're also on the cusp of a change in earnings momentum. We see that for key sectors, principally banks and property. And looking beyond the first quarter and into the second quarter, we can expect much more economic normalization and the reassertion of fundamentals. And there are a lot of good fundamental stories around which we can talk about stocks to really consider when it comes to Vietnam. So as an introduction, we'd be really looking at consumer, real estate, tourism-related financials, and trade-related plays as the most interesting stories, perhaps, during the course of FY22. We do stress stock selection, so much so that I've written it twice on this slide, so apologies for that, but we do stress stock selection. It's tempting to get involved in sector calls, but actually companies are very different here. How they're managed, what their earnings momentum is like, and how their execution in terms of their businesses. So it's always wise to think stocks. So that's the introduction to Vietnam, a good story going forward, 1800 on the index, choppy in the first half, plain sailing in the second half. Very briefly on the economy, we do expect exports to slow in the next couple of years, but that's a reflection of external economies. That's a reflection of what's going to happen in the US and the UK, US and Europe. Domestic consumption, on the other hand, is and will continue to recover very strongly post third quarter 21, where we had a very tight lockdown in Vietnam. We project CPI to rise. That's a normal trend, but we don't expect it to get out of control in the way, well, out of control is probably a bit strong, but we certainly don't expect it to be spiking as it is in the States. And in Vietnam, 4% is the point of concern for the government, where that's really feeding into food price inflation. And at that point, we'd expect monetary tightening here. We don't see that happening, so we expect monetary policy to be accommodative during the course of FY22. So finally, we expect GDP growth to accelerate to maybe 6.8% this year and 6.7% in FY23. So a long-term growth story is in prospect for us. This snapshot is interesting. We've got a little bit of red here. That's all down to Tet. So that's our Chinese New Year holiday. Is a Tet holiday which ended last week. And prior to that, we saw a slowdown in exports and imports, as well as a spike in interest rates as people took money out of the bank to pay for presents and so on. So don't be worried about what's happened in January when it comes to those stats. It's all about February and going forward. So the Tet effect will be wearing off in February. So as I say, our index level at 1800. The important point to note here, as I said right at the beginning, is that we are conservative. Our top recommendations, we see upside of 25%, our universe 15%. But actually, what we're really looking at here is earnings drivers. We're expecting no re-rating of the market. And secondly, at 18%, our earnings forecast, that is HSC's earnings forecasts, are actually below consensus, which is about 20 to 21%. So we'd expect positive upward earnings momentum will take us to the 1800 level without a re-rating. So we've been very conservative in our outlook for the index. And as you can see, Vietnam has got a good earnings story in FY22, an even better one in FY23, and is cheap. Cheaper than Singapore, for example, in FY23. So the story is good on a multi-year basis. This is just a sensitivity to show that, if we're expecting stronger earnings, we can see that actually the multiple will actually be a contraction to where we are now. We're at about 6.5 times now. So in fact, again, it just illustrates how conservative we've been with our 1800 index target. When we look at sectors, again, I've just started off by saying we like the banks. It's 40% of the market cap. We like real estate, but we think that might be more of a first half story. We think banks might be more of a second half story, while consumer discretionary and consumer staples and retailing, when taken together, is about 15%. We're also overweight. We think that is the multi-year long-term story. Really like the consumer plays. Excellent stories there. And so when it comes to what's really going to be driving the market, we have a bunch of underlying fundamentals, a bunch of thematics which we can talk about, which we can build stock ideas around. And I'm just going to touch on a few of those. But suffice it to say, I've highlighted 5 of the key areas, or 5 of the key factors, key thematics which are in play now and which are important now. So that's the global macro environment, liquidity and retail participation, that is liquidity times confidence, rising stock market. Fiscal spending is likely to be picking up quite strongly during the course of FY22. That's important for real estate and other parts of the economy, and the consumer. There's a multi-year development of the middle class, which is so exciting. These other factors shouldn't be ignored, and they will come into play, and we will touch on them just going through. But the ones I've highlighted are 5 key areas which are worth thinking about now. So very briefly on Omicron, we all know about it. We don't need to go into detail. Suffice it to say, the story here for us is that we're one of the most vaccinated countries in the world. We're at 77, so it's slightly outdated, 77% double vaxxed, 80%, 85% single vaxxed, or up to single vaxxed. More importantly, we're at 33% triple vaxxed. So there is no resistance here. People are taking the vaccination. This is crucial because we're learning how to live with COVID just as other parts of the world are. The exceptions obviously being Hong Kong and China. And that's allowing us to open up the economy, and that's underpinning future growth. So COVID is with us. We're learning to live with it. It's not a major factor. What could be a concern is new variants, which are more virulent, but then we'll have to cope with it when that comes. And you can see how the lockdown restrictions have fallen away, not just in Vietnam, but other countries in ASEAN. So we're getting on with it. COVID is a little bit of a dead story for us at the moment, but it's something to watch. Now, global macro matters. One of the key ideas, or the key concerns we have, ignoring the Ukraine, is obviously what's happening in the States. So rising interest rates are undoubtedly with us. Inflation at 7.5%. Now that has an impact for us because rising interest rates will lead to a rising US dollar, and generally speaking, that is bad for emerging markets. And we're an emerging market. It's bad because of the terms of trade are done in US dollars. It's bad because of US dollar debt. I'm pleased to say that actually our US dollar debt position is relatively small compared to anybody else, or compared to peers, should I say. And the second point is that when it comes to the US dollar, we're essentially pegged, which means that we don't bear any risk to currency fluctuations. So we're not an Indonesia or a Brazil, for example. So so long as US demand keeps up, so long as the Fed treads the tightrope of allowing US demand to continue to grow, i.e. they don't clamp down the economy too much, we should be fine. We aren't going to be materially affected by a US dollar rise, which is the good news and makes us relatively unique. I think the second macro issue is China. Obviously, what's happened in the real estate markets has impacted that economy. We're heavy exporters to China, so in fact, we're probably more leveraged into China slowdown than we are into rising US rates. So we need to watch that carefully. So all in all, basically at the end of the day, what's really going to drive our earnings though is the underlying demand, not just in the US and Europe, and also whether tightening monetary policy is going to go too far, and whether that's going to stymie economic growth externally. Exogenous factors are important for us at the present time. Inflation, we don't have inflation so much here. This is we're currently just under 1% for January, under 2% for January. It's basically incipient. It will rise, but part of the reason why we feel so comfortable in monetary policy is because inflation isn't under pressure in the same way it is in other markets. If you want to hedge, though, you're basically looking at these types of stocks. There are consumer plays, which are great, also agricultural fertilizer plays, and also rubber companies. So we like those commodity products which can pass on inflation issues onto customers. Breaking through into FY22, no company is created the same in Vietnam, so we've got to be very stock selective, and this is what this slide is about. We think our companies we push, we like, and we focus on are quality names. The fifth area, liquidity. Excellent liquidity conditions, interest rates, interbank rates remain low. They spiked ahead of tech, but have come down since. More importantly, there's abundant credit support for the economy. Lots of lending goes on, and a lot of that finds itself into the stock market. So liquidity conditions will remain very favorable, and because we don't have that inflation pressure, we don't see interest rates moving up aggressively at all during the course of FY22. And similarly, this goes back to retail confidence. So long as retail investors are confident, we can expect large volumes in the market. You can see how it's accelerated over time through this chart here. We can also see the number of new accounts has just grown enormously. So the level of participation has increased hugely, and with retail confidence, with retail participation, we can anticipate continued strength in the stock market. Always asked about foreign investors. Generally speaking, they've been net buyer, but just creep below into net selling territory in the last couple of months of last year. That's partly because of external macro issues. But what's interesting is that while foreign participation has fallen to 7% or below of the total market, you can see that in absolute terms, we've seen a lot of money coming in during the course of FY21. So we'd expect more foreign participation to come in. These guys, we can say, are basically sitting on the sidelines, waiting for that weakness, waiting for that volatility, which I talked about. And we think they'll be a key factor helping the market, driving it forward. But again, stock selection remains critical when it comes to that. Global companies, we think will do well. You can see how we've really come off the bottom when it comes to electronics, consumer, textiles, all key areas for Vietnam. So we expect the export-led sectors to perform well. And again, we've touched on the US dollar. The key thing here, as I say, is the pegging, which we have. The current trend is for a little appreciation. Last year, we were designated by, or the year before last, by Trump's administration as currency manipulators. That's been washed aside. The Biden administration has been a positive factor at all sorts of levels, but not least because of the removal of that designation around currency policy. So we've seen strong reserve build-ups. We've got a current account deficit, or last year we had a current account deficit, but we fully expect that to become positive over the next 3 years. So it all points to a stable currency. We don't see any reason why we'll see any shift in the policy at all, and that will protect us, as I say, from the impact of rising US dollar. Fiscal spending, this is another area which we think, or I think, is pretty positive at this stage. At the moment, this is just pointing to the slide on the right here, that Vietnam's COVID relief, 2.3% of GDP is very low. For emerging markets generally, it was about 3.2%, so we're below low-income economies. And for middle-income economies, which we're beginning to push, that was about 5.6%. So we're very low in terms of COVID relief. And part of that was to focus on the debt position, external debt, which really didn't increase at all. And with the way we can anticipate the US dollar going, that has to be seen as being judicious. Of course, what it's meant, though, is that we've seen relatively high levels of unemployment for Vietnam and high levels of underemployment, and that is having an impact on keeping inflation low as people build up their household balance sheets after a difficult period. But ultimately, it's also giving Vietnam firepower, and that firepower is going to be focused on public spending during the course of FY22 and FY23, and most importantly around logistics and transportation. And this feeds into the whole premise we have on Vietnam, which is that FDI is a major push factor for future growth, but it wouldn't be without the investment in logistics, without the investments in highways, ports, etc., which public spending is now being focused on. We can see we've suggested a basket of names down here: RE, BNP, steel companies. These aren't, one or two of them are pretty okay, RE, BNP, but the steel companies are under pressure for external factors. We've got corporate governance issues around some of those construction companies. But nevertheless, there are leverage plays into this infrastructure story, and perhaps the best are actually around industrial parks and around foreign direct investment. So we've seen a bit of a lull in foreign direct investment, and part of that has been due to the lack of accessibility to Vietnam, i.e. we have had no internal flights coming in, which has meant that decision making has been problematic. That's eased off tremendously, so we can expect a major pickup in FDI spending during the course of FY22 and FY23. And that process is also helped by the negative dynamic, if you like, between the US and China. And that negative dynamic is causing people to de-risk their one country exposure to China. And again, that just reinforces the FDI cycle for Vietnam. So a number of leverage plays into that: manufacturers, port operators, air cargo, energy, real estate, a number of plays we have into the FDI story. It's a long-term story, and we fully expect it to be a positive factor driving Vietnam for a number of years. And again, you can see on the right-hand slide, travel restrictions really did prevent investors coming in to make the investment decisions they needed, but that's all changing in the last quarter. So the consumer and the rising middle class, we've got three fantastic long-term stories here. Firstly, demographics: young, well-educated, It's also got very high female labour force participation, which is great. The urbanization story is very strong. We've got one of the lowest rates of urbanization in Asia, yet it's also one of the fastest rates of growth, which means that we're going to continue to be feeding the FDI sector, if you like, with a well-educated workforce. And there's a rising middle class. People are just consuming more. And again, a number of consumer names we like. And the way we look at this, just in very simple terms, is this is Vietnam on the right. You can see the population chart on the right. This is Vietnam in 2019. If you look at China in 1995, it's exactly the same. And we all know that we then entered into a period of superb growth of China. That is, over 10% up until really the financial crisis in 2009. We're expecting similar rates of growth pushed by the population demographics in Vietnam, and that's what makes the consumer story so compelling. And here are a couple more charts. You can see it's all relentless growth when it comes to retail sales, growth of middle class. I could put in a number of slides. In fact, I have. You can also see the preponderance or the importance of Hanoi and Ho Chi Minh in terms of driving the economy, which feeds into this idea that urbanization is a key driver going forward. Tourism, we've had no tourism for 2 years. Official numbers would suggest in 2019 tourism accounted for 5% of GDP, could be as high as 20% indirectly. That all left. We haven't seen that for the last 2 years. That's all going to come back. Maybe not all in a big rush, as some would hope, but it's all going to come back. So that creates a whole new story, a whole new impetus, not just for consumer names, but also the tourism plays I've listed here. We're expecting 4 million tourists in FY23, which is 75% below the peak we saw in 2019. So that's a very conservative number, frankly. So the tourist aspect is it's a free ride. So in our GDP forecasts, we've got fairly conservative numbers for the impact of tourism coming back. If it accelerates, exceeds levels we hadn't anticipated, that's going to further drive our GDP forecasts up. ESG, I talk about this, but probably with futility in Vietnam. I don't think the market is really ready for ESG analysis. Long term, we hope that companies will be rewarded for their focus on good ESG. Some companies are very conscientious, like Vinamilk and increasingly Sabaco and so on and so forth. So we hope over time ESG will result in material improvements in their valuations. But at the moment, this is probably a little bit premature. Financial restructuring is a long ongoing story. The economy requires capital, banks require capital, companies will require more capital. Most of that is actually facilitated by the banking system, so that needs to expand. We're seeing a huge pickup of the corporate bond market, but it's still in its infancy. So that financial restructuring needs to improve. But just as importantly, we need more accessibility for foreign investment. So the sooner that we see more open markets, the better for the financial markets generally. So we don't actually have a corporate bond rating agency in Vietnam, but hopefully over time that will change. But this is an area where we're seeing small steps rather than rapid steps, but those small steps are in the right direction. And the sooner that we can get accessibility to foreign capital, the better. And that plays into this other theme here, which is a sovereign debt rating. For various reasons, under Fitch's model, we could have had 3 to 4 improvements in our investment grade to certainly above investment grade. We're currently 2 notches below. We haven't had that because of subjective inputs they make for their models. So it does look odd that we are so far, we're at a lower rating, for example, than places like the Philippines and Indonesia. And we would fully expect that to change. We're doing well. Our GDP per capita is rising. Economic growth is strong, public finances, etc., are important. Resilience to external shocks. There's a whole list of areas where Vietnam has improved tremendously, FX reserves, etc. So we feel as though we're moving into a position where we can start seeing our sovereign debt ratings rise again, and that's hopefully in FY22. But hopefully, I wouldn't want to say certainly, but we hope in FY22, but certainly we would expect it in FY23. And this is really important because once we get to investment grade, that allows much more ready capital to move into Vietnam, and that goes back to the financial restructuring, the accessibility of capital to help drive growth. So although this is a bit dry as a subject, sovereign debt rating and improvement in the sovereign debt rating is going to be a key catalyst on the longer term for Vietnam. ETFs, a good way to access the market, and they're also very influential, they're very positive. We've seen a lot of new issuance, so that has had a big impact on the market going forward. And then MSCI inclusion, I feel as though I've been talking about this since 1923. We're still in the frontier market basket. Lots of people say, when are we moving into the emerging market basket? Well, we will do that. We will move into the emerging markets basket once we allow direct investment into the stock market. There is legislation for NBDRs, but it hasn't been filled in yet. No one's interested in that right now, given the excitement of retail investment and participation in the market. But that needs to come. That needs to allow foreign access into the market before we can go up to emerging market status. The introduction of omnibus accounts needs to happen, etc., etc. There are a number of things which goes into the financial restructuring basket, which needs to happen before MSCI conclusion. If I'm pushed, I will say it's possible that we might see that in FY23, in which case we could see inclusion by FY24. But I refer you to this slide. The important point to note about MSCI inclusion is that in the 18 months before, that's when you want to buy a market which is about to be included. Afterwards, it all goes a bit stale. And in the case of Pakistan, they've already been downgraded to frontier market status again. So, when we get more clarity around when Vietnam is being included, that's the time to play the MSCI story. But it is a factor, it is worth watching, and it is important. So lots of other thematics to consider. There are risks and challenges. I won't go into great detail, but just highlight the three which I think are most important. The first is the advent of Omicron tells us there's more variants out there. Right now, it's not an issue, but it could be if we see something different. Monetary tightening, I've banged the drum on that. I think we're well protected from it. Vietnam has low vulnerability, as I've shown here. But of course, there's always the risk from China. There are other risks we can talk about, but actually the positives outweigh the negatives, I think. And I just want to end on this chart here. I hope it's clear. Yes. Really, this tells a long-term story of Vietnam. We've got a great opportunity. Volatility is creating, good timing to buy. COVID is falling away. Trade wars have been helpful for FDI. Vietnam's attractively priced. We've got a lot of positives, and some of these are multi-year positives, which will continue to help Vietnam as an investment destination. So that's the formal part of the presentation. I've gone through a lot of ideas pretty quickly. I'm very happy, if appropriate, to take questions on any of what I've talked about, or also any shares or any other aspects about Vietnam. More than happy to discuss. So thank you very much for listening.
Hi there. Thank you so much for the insights, Chris. Members of the audience, if you have questions for Chris, you can go down to the question box, which is located on the on your control panel. It's somewhere at the bottom. You can head down there and type in your questions. In the meantime, I have my colleague Sean Tan, BD Manager for Phillip Nova. He will walk us through the opportunities in the VN30 index futures contract, and share a little bit on the opportunities that the Vietnam market will offer. Sean, if you're all set to go, I can hand the time over to you.
Yeah. Can I get the share screen?
Yes, yes, you can. I see you on cam. In case you are wondering, let me just give you sharing rights right now.
Thank you. Show my screen. Can you see anything here?
Yes, I can, Sean. We just need the slides on preso mode. Yeah, it's good now. Thank you.
Yeah. Okay, hi, good evening to everyone on the floor. Thank you for participating this seminar co-hosted by Phillip Nova and Ho Chi Minh Security Corporation by Chris Hunt. So I hope the outlook actually provided by Chris giving you an insight of the Vietnamese market to let you know how to use the information to introduce a new portfolio into your tradings, and as well as finding a new trading opportunity to make off from the market. So right now I'll be running through the key summary of why trading VN30 index futures. Yep. So as what we know from Chris, that for VN30 there is a diversification, mainly heavily looking at the banking and insurance industry. So if you are looking for trading in VN30, maybe you are wanted to focus on the banking and insurance side, that you think, oh, Vietnam is very strong for the next 6 months, 1 year on the banking, then maybe VN30 might be going up. So that is where you find, oh, a good trading opportunity from that. So also looking at the summary of the potential growth GDP for 2022, we are forecasting about 6.8, that plus minus. So these are a good indicator to let you know that, oh, there might be some good opportunities that you might be able to see in the VN30. So also, if let's say, for example, you are a person who actually read a lot of fundamental news, then you are looking more on a probably on the food manufacturing, electronics. All this information will add in to allows you to make certain trading decision to see that if this VN30 is suitable for you. Yeah. So last but not least, that maybe I can just share with you that on the general Vietnam GDP, for around 40 to 50% is heavily on the services side, and about 30% is mainly on the industrial and the manufacturing sectors. So all these are the small little element to allows you to understand how can I trade VN30 and what kind of information will help me to make decision to trade on VN30. Yeah. So I'll probably show you a bit of how the trading volume has been developed for the last 2 years. So if you look at the beginning of 2019, so the monthly trading volume is probably looking about 3 millions to maybe 1.5 to 3 millions. So within a year into 2020, we saw that the trading volume actually increased by almost like 80%. Let me check. Yeah. So it actually went up to about 80%, and the 2021, you can see the trading volume actually went up as high as 6 millions. And out of this trading volume, 90% of the trading volume actually are traded by the retail flow. So it just have a lot more liquidity, allows you to actually participate in the market. And Phillip Nova is the first company outside Vietnam offering the futures index. So that is something that you may be able to get into the market earlier than the rest of the people. Yeah, so the second chart I'm going to show you is literally the settlement price. So just now, Chris has said that forecast about 2022 to hit 1800 on the index point. So basically, if you look at the settlement price chart from the 2019 and 2022, you can see that it's progressively moving. And right on top, I did some basic calculation from 2019 to 2020. Price increased by 70%, 20 to 21 increased by 48.5%. So we are looking probably another 20 to 40% for the coming year. Yeah. So before you start trading using VN30, you of course need to understand what is a specification, isn't it? So right now, the contract spec is right on the screen. So if you are trading a lot of VN30, it is almost equivalent to every index point is $4.40 USD. Of course, it is in Vietnam dong, but this is just to let you understand that this contract is not huge. So the risk is slightly smaller than other contracts that you can trade. Yeah. So the trading hours is about 6 hours. So based on Singapore time, will be 9:45 to 3:45. So these are the trading hours you can actually participate into the market. Then final trading days is the third Thursday of the delivery month. In case it is a holiday, then it will be 1 day before. Yeah, all this information you can contact us if you'd like to actually understand a bit more. Yeah. Then I'll also probably share with you about some of the potential costs involved with the trading on VN30. So exchange, there's an exchange fee. So you will be, every one lot you trade, you have to pay exchange about 13 US cents roughly. Then tax component additional 44 cents. So these two components is probably about 57 cents that you need to pay to the exchange. Of course, there is one more element, is called the overnight position. So if you are holding overnight position, so every lot it will just cost you another 13 cents. This is what I can see is this overnight position of some traders who are speculators. They don't want to hold overnight position. So this kind of fee element will actually help to boost more volumes, because it's like, oh, I don't want to pay overnight. So people probably will just liquidate, buy in and buy out. So you can see that there are more liquidity for you to exit the market. Yeah. So in general, I'm just giving you an overview of why you should use VN30 to trade. Is it suitable to your trading strategies, or is it good to actually put into your portfolio? So this will be up to you to make the decision. So I'll probably will pass it over to Sri. Then we can have a Q&A session.
All right, thank you so much, Sean. Well, thank you, members of the audience. We have some questions for our speakers. I see Chris has materialized once again. Thank you so much, Chris, for being here. We have some questions for you, Chris. The first one of those that I find really exciting is, how far away are we from a free float VND, Vietnam dollar, or is this Vietnam dong rather, or is this something that is not going to happen anytime in the near term?
Not any time. Not any time in the near term. That's the easy answer. It's just you know, and frankly, if you look at the circumstances over the last 10 years, it's actually been the right decision for Vietnam. You know, we had a bit of a banking crisis in 2012, and that impacted the government's balance sheet pretty considerably. So a lot of that has been, it's all been about repair. And I think what's really important also is that having a currency, a peg currency, also allows a tight monetary policy and keeps inflation relatively in check. And the point here being that rising inflation, rising foodstuff inflation, all the rest of it is not something which anybody wants to see here. So yes, cities are very wealthy, but we've still got a countryside which is still quite poor. But it's the transformation of that countryside moving into the middle income class, which is also important. But the short answer is that we're not going to be seeing a freely floating currency for a while.
Right now, Chris, well, we have some geopolitical tension in Europe, and well, we have seen oil prices and gold prices move as a result. Is there any potential impact to the Vietnam market, or Vietnam will be unaffected by this?
Oh yeah, I mean, look, I think definitely, I think the world over, if things go badly in Europe, then I think the world over is going to be impacted quite considerably. What does one know? But I think the consensus is that it's all very much about trying to give Mr. Putin an opportunity to pull back, I say, with face. But who knows? Where this positions us, of course, is that we import gas. We have requirements for raw materials, of course, just like anywhere else. And of course, rising iron ore prices are having an impact already on the steel companies. We've seen oil and prices increase quite considerably, and why that's not really flowing through into inflation is because petroleum prices in particular, control at the pumps, etc., etc. But there will be an impact should we see military action, obviously in the Ukraine. But also, let's be honest about it, the South China Sea, or as we know it in Vietnam, the East Sea, is also a flashpoint and much closer to home. And that's prevented the ability for Vietnam to really develop quite a lot of the natural resources it has, which is the gas fields and so on and so forth offshore. Now, there is a lot more potential. There are a lot more projects coming on stream, which is the good news. about it, but we live in a difficult neighborhood. Unfortunately, it's not just Taiwan, and it's other parts of the region which know that China's there.
Since you're on the topic of China, what are the key trading partners for Vietnam, and how big of a player is China?
Oh, China's Vietnam's biggest export market, followed by the US, followed by Europe. So that's why it's important what happens in China. And this is also a lot of it's also a lot of agricultural products, and that's we've talked about urbanization. That's 63% of the population. So China's economic strength really matters at all sorts of social economic levels. To be perfectly frank with you. But the high value add, so the importation where FDI is going in terms of value, 70% is coming through FDI, and that's going to the States and Europe. So that's why Western, if you forgive the phrase, European and US consumer demand is so important for our long-term growth. But actually, if the exports cycle, if the exports fail, agriculture, etc., comes under serious pressure, that's going to be a bit of a negative, which is one of the concerns we do have. And China's economy, as we know, is not in the best shape. They're cutting interest rates. They're trying to stimulate. They've got big problems in the residential sector. We know all this, so it's worth keeping an eye on China.
Right. So next question is from Ng. He's asking, how is Vietnam positioned as a manufacturing hub, alternative to China, or as part of the other countries in the region? Where does Vietnam stand?
No, I mean, Vietnam's positioning is very good. I think it's fair to say that we're attracting more and more FDI relative to, say, Thailand, Sri Lanka, etc. At the moment, we're pretty low down on the food chain, so we're definitely secondary manufacturing. And by that I mean we're focused more on textile. We do a lot of textiles, garments, etc., which is pretty low end stuff. So in that sense, our competitive group is Sri Lanka, is Pakistan, is Bangladesh, but we do it better and we do it well. And there are a number of companies which have actually green. You can call them green companies. They're producing recyclable synthetic wools and all the rest of that sort of stuff. So we're moving up the chain there. The other side of it is that we do a lot of component assembly for many electronics firms, including Apple, but largely Samsung. The dependence on Samsung has disappeared over time. It used to be up to about 30% of FDI exports for Samsung. That's now diminished as we've expanded the direct inward investors coming into Vietnam. So we're in a very good position, but we shouldn't kid ourselves. We've got 98 million Vietnamese and 1.4 billion Chinese. So we're not going to solve the world's problem of having dependence on China. And while we've still got high levels of urbanization to come, we're only going to be able to go so far in terms of size of disintermediating China. And there's some schools of thought which actually think that China isn't that worried about losing certain types of manufacturing because it is low end, it is lower margin to Vietnam, and that it's trying to push itself more up the cycle. I don't know, I'm not a China specialist, but there is that aspect of it that actually there's a little bit of a symbiotic relationship here. And then the final thing, which is also quite interesting, is that we're getting Chinese companies assembling in Vietnam now. And part of that is to avoid the strictures around the trade fights they're having with the US. They make something, they import a lot of the product from China, they assemble it in Vietnam, they can stamp it made in Vietnam, and that doesn't upset trade commissioners in the US. At least that's the thinking. So, there's a lot going on, and almost all of it is positive when it comes to FDI, when it comes to Vietnam's position.
Right, we have another question from Ng. He's asking, with the ascent and promise that Vietnam is showing, do we see Vietnam playing a bigger role or have a greater impact in ASEAN?
Oh, I would hope so. I would hope so. I mean, I think Vietnam's joined a lot of free trade agreements, including involving a lot of ASEAN companies. So I think they're going to become more influential. Clearly, geopolitics, Vietnam is crucial in the region. I mean, it has a policy of strict neutrality between China and the US, understandably so. But it is a significant player in the East Sea, in the South China Sea. So I think that's really very important. And as foreign investment continues, then it becomes an important partner for global corporations going forward. So I think Vietnam's influence is only going to improve, is only going to increase.
We have a couple more interesting questions. In the event that, okay, how likely would the Vietnam government bail out failing firms locally or sudden regulations imposed on local firms? Like how I know the Chinese government did it with some of their technology firms in 2021. To sum up, would the government bail out failing firms? One, and two, how likely is there to have like very sudden or quickly imposed regulations on a particular sector in Vietnam, or has it been very steady throughout?
Okay, I'll ask you about the second question. I didn't quite get that, but let me just answer the first one first. In terms of government support, yes, absolutely. I mean, they've been trying over the years to move away a little bit from that sort of iron rice bowl type approach. But there are a lot of government companies which are owned and which really aren't that efficient. And over the years, they've been trying very hard to get them to shape to list. And that has the double effect of, to get listed, you actually have to improve your operations. And then once you're listed, then you obviously have external shareholders to help with the burden of all of that. So, but that's been a very, that's been a slow incremental process. But yes, the government will bail out companies as necessary, and they will do that through some of the state-owned banks. So this is not untypical with the rest of Asia. The state-owned banks tends to have to do national service in certain circumstances. So it's not something which gets shouted about, but definitely there is government support for difficult industries. The key for the government is that we have a relatively poor population. It is getting richer. We have a relatively poor population. There is no real social security network, as you might understand it in, say, the UK or Australia or France, for example. So keeping people in work is pretty important as well. So providing employment opportunities, which some of these companies do, is pretty important. But they are trying to improve that. They are trying to make these companies more responsible for their operational direction.
All right, thank you so much, Chris. Well, in terms of the second question, yeah, in terms of government regulation, like what we have seen in China, there was a sudden regulation on technology firms, and it impacted investments throughout across the world. What's the government like in Vietnam? Like, are there knee-jerk regulations, or overall, based on what we have seen, is steady and well thought out for plans for the future?
Right. Yeah. No, I mean, China's we wouldn't. I don't see that sort of eventuality happening in Vietnam at all. Complete reversal of decades-long policies. I mean, it is very much step by step, slow and steady wins the race. That's the approach we take here. Sometimes it's frustrating. In the formal presentation, I talked about financial restructuring. That is one area where it'd be nice to see everything move a little bit faster. But it's slow judgment, requires consensus building, and then things move forward at the pace which the government feels comfortable with. But my experience tells me that it's very unlikely we're suddenly going to see. I'm trying to think of an example, but we're suddenly going to see a reversal of policies around foreign ownership of apartment blocks or whatever. I don't see that happening at all here. It's much more steady as you go.
All right, just another interesting question for you, Chris. Are there plans for the government to encourage growth outside the two big cities to ensure growth is widely spread out, or there are no plans as of yet? I mean, I wouldn't say it's a deal breaker because the cities are big cities, but it's interesting to know how the country is developing.
Yeah, I mean, certainly, there's as a Brit, or what I ever hear about is leveling up. It's the same idea, but sure, there's investment which is being directed. I mean, Hanoi and Ho Chi Minh are definitely big magnets, though. That's part of the problem, and both of them because both of them have big food baskets. The Red River Delta and the Mekong Delta. So. And with that comes a lot of land, which is right for development into IPs. There's much better infrastructure. The ports are either located north or south, and so on and so forth. So the central area, which I suppose you'd really be looking at Da Nang, which is the third city, is definitely, they're definitely making efforts to try and build that up, and there are plans for more port facilities there, etc., etc. So that is improving, and Da Nang is actually a great city to live in. So it's not like, from the point of view of foreign investors, it's not a disaster, but it will take time. Logistics is a major issue, and it's a major issue which again, I hope I stress clearly is ripe for improvement and is likely to be improved with the public investment expenditure we expect to see accelerating. So a north-south highway, for example, would be a very useful addition. All sorts of projects around the electricity network and power delivery and so on and so forth would be very great additions. We're a very long country, so there are inefficiencies just because of geography. So there are real challenges, but yes, there is a focus in trying to make sure that not everything centers on Hanoi and Ho Chi Minh, that there is an effort to expand and to improve other cities and county and states.
Chris, before I field the final question to you with regards to what do you think, based on what you've shared today, are the key takeaways for the audience today? Before I field that to you, I'm just going to jump to Sean for a moment. Sean, we received a question on the VN30 index futures, which you had shared earlier. Do we have VN, apart from the index futures, which you had touched on earlier, do we have options for the VN30 index?
At the moment, we are just offering the VN30, but we do have the access to it. But we would like to actually get a little bit more feedback from the customers who are looking to actually wanted to trade a few stuff. So we will consolidate, and if we think it's suitable, then we will probably roll out the products for them.
All right. So just to share, what would be the key takeaways of the VN30 index in your opinion? What should the members of the audience take note for the index contract?
Would that be for me or for Chris?
For you, Sean. I'm not letting you off the hook yet.
Yeah. Yeah. So basically, what I would think that for takeaway for trading on the VN30 is for customers or traders who are specifically looking to invest in Vietnam, need to take note of what comprise it within the VN30. So from what I saw is out of the 30 companies, 9 of them are bank prices. So index is heavily probably swing by the bank. So correct me if I'm wrong, Chris. So if let's say there's any big movement with the bank side, then maybe the VN30 will be greatly affected.
Yeah, I mean, I think when you're talking about takeaways here, I think we can all agree. I hope we can all agree the long-term prospects are great for Vietnam. We are in the world economy increasingly so exogenous factors will have an impact in how the market reacts. But my final comment on this is, volatility is a great opportunity. It's always volatility equates opportunity. So weakness in the market is a great time to buy if you're a short-term trader. But frankly speaking, there's so many good long-term fundamental stories around Vietnam, which are multi-year, that actually you can feel pretty confident that you're going to be performing well within your own portfolio. So I'm an optimist, which is not often I say that, having been covering Asia for 30 years, but I'm an optimist on Vietnam now.
Mhm.
All right, Chris, thank you so much for your insights. That's more or less the time that we have for questions. Thank you so much, Sean, for covering on the VN30 index futures. Members of the audience, if you have more questions, not to worry, you can send them in the survey form right after this webinar, and we'll get back to you in our follow-up email tomorrow. Okay, so you would be able to see a recording of this webinar, so you can catch up on the insights that Chris and Sean had shared today. And thank you so much for being a wonderful audience. Till our next live webinar, take care and stay safe. Thank you, Chris. Thank you, Sean.
All right. Thank you. Cheers. Bye, everyone.
Bye.
Bye.